Hello, everybody. My name is Bennett Tchaikovsky, and welcome to my abbreviated version of Dollar Tree. So, Dollar Tree trailing 12 months was wonderful. And by the way, when I'm making these videos, I don't think I need to say this, but I'm going to say it again. Anything you see in here are my opinions only. Does not account for any legal or accounting advice whatsoever. So, there you go. These are Dollar Tree's financial statements, and they can have them. Just kidding. So, when we look at this over here for Dollar Tree, and just to kind of really summarize this, I gave my students in my financial statement analysis class somewhat of an impossible task. And what was that impossible task? Well, I gave them a company that had discontinued operations. What does discontinued operations mean? Well, a company like Dollar General, it's when you look at this, it's essentially going and saying, okay, sales minus cost of goods sold. There's an inherent assumption when you publish financial statements that it's continuing. So we don't say continuing, but that's the inherent assumption. Well, with Dollar Tree, they decided to sell Family Dollar. And we found that I'm going to link the previous video by going through the 8Ks. And we found out that they basically divested. What did they go through and do? Well, Dollar Tree then basically had to go through and restate their financial statements. And when they did a restatement of their financial statements, if we come over here to their consolidated statements of income, that's Dollar General, wrong company, Bennett. Let's find the tree. Okay, so when I come over here, what you're going to notice is that for the financial statements so when they filed, they basically showed their income as basically going through and how it was restated. So in the prior video, I kind of went through and showed how to go through and do this. But for all intents and purposes, to come up with the trailing 12 months value for our company that we were going through and looking for, what I had to go through and do is to say, okay, basically, here is this number as of February 1st, 2025. If I take so when I'm doing trailing 12 months, I need basically four values, right? I basically need right. So I essentially need four values. I need the most recent quarter. I need the second most recent quarter, and then I need basically the third and the fourth, or the first and second quarter on a trailing 12 months basis. Well, because Dollar Tree had filed two quarterly reports, I was able to kind of say, okay, here is the values for the most two recent quarters. Those are easy. The harder part was to figure out, well, what is going to be those first two quarters. And there wasn't really an easy way I could figure it out. So what I had to go through and do was to basically take the new restated year-end number and then subtract from that the 6 months ended 8/3/24. That would then give me 8/3/24 to effectively, that would give me 8/3/24 to 2/1/25 for those 6 months. And that's what we went through and did. So that, in a nutshell, is how I went through and did the computations for the trailing 12 months for Dollar Tree. Obviously, a very challenging thing to ask you to do, but nothing is easy in the world. And this, I think, is a great exercise, even though it might be frustrating. Hopefully, I'm looking forward to grading some of your papers, because hopefully some of you got it. But in any event, if you didn't, it's okay. Now you know how to do it, and that I was just as frustrated as you are. So I look forward to seeing you on the next video, and thank you for being with me here today.